Hello guys, you're welcome to my YouTube channel. This is Synthetic Goddess. On this YouTube channel, I share strategies on how to become a profitable trader even if you're a beginner. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. Also, if you're going to love to join my Telegram channel where synthetic traders share ideas and analysis, also where I share my directional bias for the day, check the description box for the link. You're going to see the Telegram channel link in the description box. Click on it and join. So on this video, in this particular video, I'm going to be using Volatility 50 index to explain in this video. I trade the synthetic indices. If you would love to register for my broker, check the description box also to register with my broker so that you can trade all these indices 24/7. It is always open 24/7 in a day. So you can check the description box to register for this broker. So in this video, I quickly want to share ideas on how I analyze. I want to explain how I analyze so that you can also do the same for every of your analysis. And also be sure that you are always very careful whenever you analyze, because any mistake on analysis, it is going to really tell on your trades. So be very careful. Take trading as a job. Take trading as a business. So you have to be very careful with it. You don't have to do it in a hurry. So just do it calmly and be patient and watch your trade play out. So like I said, I'm going to be using the Volatility 50 index, and I'm going to be starting from the weekly time frame to check my order flow. Okay, so on this weekly time frame, my order flow is basically to the downside, meaning we are in a bearish move. We have a bearish momentum because our last break of structure is to the downside. Our last break of structure is to the downside, so I'm going to be marking that out on the weekly time frame, checking my last break of structure to the downside. This is my last break of structure to the downside. So where is my protected high? This is my protected high. I'm going to be marking out my protected high, the high I am not expecting the market to come back and raid. Remember, in one of my videos I explained characteristics of a major liquidity, and I said break of a strong low or a strong high. So this is a break of a strong low. I am marking this place out as my protected high. That high is the protected high. So anything that happens from here to here, anything can happen from this high to this break of structure. All I am just expecting is that market shouldn't break this my protected high. Anything can happen inside here. The market can decide to take internal liquidity. In fact, the market can decide to take this high. The market can decide to take this high off. Yes, it is not a break of structure yet until we have a break of structure of this protected high. So I am looking into this range from this high to this low. That is the range I am looking into. So I'm going to go to my daily time frame, and then I am going to look into what the daily time frame is telling me. So yes, we had a break of structure to the downside. So let me see what the daily time frame is telling me. Okay, my daily time frame last break of structure was to the upside. My daily time frame break of structure was to the upside, so I am marking this out as break of structure to the upside. This is my break of structure to the upside. Here is my break of structure to the upside, and where is my protected low? The low I am protecting is this, because we had the break of structure to the upside. So here is the low I am protecting. Here is the low I am protecting on this particular time frame. So basically protecting this low. If market takes out this low on daily time frame, I am expecting the market to come and take this low on the weekly time frame. I'm expecting the market to also take this low on the weekly time frame because my protected high has been broken. My protected low has been taken, so I am expecting the market to take that low also. But until we take this particular low on the daily time frame, I am not yet confirmed bearish on the daily time frame. Now I'm going to analyze what is inside the internal structure. Remember, from this particular high to this low is where my current range is on the daily time frame. That is where my current range is on the daily time frame. So I'm going to be analyzing that internal structure and I'm going to be explaining it right now. So on daily time frame, we had a minor break of structure, which is the first intent. This is a first intent to the downside. This is a minor break of structure. So after we had the minor break of structure, we had this movement to the upside. We had this movement to the upside, which did not take internal liquidity. It did not enter into our internal liquidity. It did not take all of the range liquidity. Remember, here is where our range liquidity started from, that break of structure. So we are marking that out. I'm going to be marking that out. So this is the eye of the range of structure for this particular move, for that particular structure. So I am marking that out. So the market did not take it. Now the market came back and took it and created this major liquidity for us. The market created that major liquidity for us. So we had the break of structure to the downside. We had this break of structure to the downside, making this low a strong low also. This low becomes a strong low because this is actually a stop on liquidity. We had double bottom and the market entered it, and we came back to break our major liquidity. The market broke our major liquidity over here. The market broke our major liquidity, and this is our major low. This is our major low. So I'm going to be marking that out as a major low also, as my protected low. If you check it on the 4 hours time frame, it is the 4 hours protected low. So I am going to be marking it out as my protected low. Let's check the 4 hours time frame, and then you're going to see that it is the 4 hours time frame protected low. So I'm going to be saying it is the 4 hours time frame protected low. Here we are. So we have the 4 hours time frame protected low already. So let's go back to daily time frame so that we can see it clearly. So here we have a break of structure to the upside. I am not expecting the market to come back and reach this my low. If the market reaches this my low, it simply means we are in a downtrend. We've changed character from being in an uptrend to being in a downtrend. So I have my protected low here. Here is my first break of structure. Here is my first break of structure. The market came back, created inducement for itself. It's created inducement. So here is my inducement for the first break of structure. The market entered the low. The market took out the low. Here we go. After taking out the low, which is the inducement, after taking out the low, which is my inducement, we had the break of structure to the upside. We had a break of structure to the upside. After breaking structure to the upside, now if you check the 1 hour time frame, this is our protected low for 1 hour. Here is our protected low for 1 hour. on our 1 hour time frame. Remember, we've taken liquidity. The market has induced liquidity. So here is our major low for now. So we're marking this place out as our protected low again. So if the market breaks this low is no longer safe. It is not safe. So I am marking this out because if you check the 1 hour time frame, that is your structure range protected low. So I have marked out my structure range protected low. Now the market is coming back into my protected low after breaking structure. So I am focusing on this range from that eye to this low. That is my current structure range that I'm going to be looking forward to take my trades. If I'm going to be taking any trades, I'm going to be taking it from this structure. So let's go to the 1 hour time frame, 4 hours time frame, and then we're going to see for ourselves what is happening in the market. So we have a break of structure to the upside. We have our protected low. Now this impulsive movement, if we check the daily time frame, checking the daily time frame, this movement to the upside did not take this high. So this is not a higher high. So it did not take this high. So we created an SMS. We created a shift in market structure. After creating a shift in market structure, the market broke this low. Remember, whatever happens in between this range, we are not really concerned. This low does not mean we have a break of structure. This is not a break of structure for me until we take this particular low, because it is the low created for us to break our structure. So here is where I'm going to be looking at as my break of structure, as a change of character to the downside. That is when I can start looking for my sell move. Right now, so we are in between. We are still in a range. We've not broken structure to the upside. We've not broken structure to the downside. Now here is an impulsive movement to the downside. The first question you're going to be asking yourself, the first question you're supposed to ask yourself is this particular demand zone, which is the SC candle, is it going to hold? Will this hold? Now the market is inside this demand zone. So the question you are asking yourself is, will this demand zone hold? Now we have this impulsive movement to the downside. Normally, the market is not supposed to make this impulsive movement back to a demand zone, but we cannot decide that yet. Let's check the 1 hour time frame. Going back to the 1 hour time frame, we're going to be checking out for our structures on the 1 hour time frame, and we're going to see where we're going to be looking out for our break of structure for the market to continue either to the upside or to the downside. So we had this break of structure to the downside. Here is a break of structure to the downside. Our last break of structure on the 1 hour time frame is to the downside. This is it, and this is our protected high. We have our protected high here. Checking our protected high here, the protected high has not been taken. We've not even gotten into this structure, this particular structure. The market has not come back into this particular structure. We've not entered into this internal structure yet. We've been creating range structure, continuation of range structure, and continuation. So if we eventually break this protected high, breaking this protected high, if we break this protected high, this is when we are totally, and this is where we are, oh no, not totally, this is where we are partially expecting a bullish move, because this is on 1 hour time frame and the market can decide to do anything. Always remember that. So we have a minor break of structure to the upside. If we have this protected high broken, these are protected high. If we have it broken, let's check it out. Yes, we have this. If we have this protected high broken, that is where we can say we have a minor break of structure in the market, and we can now change our bias in looking for a buy move. This is when we can change our bias in looking for a buy move. Right now, what I am going to do is I am going to stay off from volatility 50 index, because we are still in a range and I can't just afford to just enter into the market anyhow, get out of the market anyhow. I don't even know the direction of the market, so I can't just start getting into the market and going out of the market anyhow, because it has not given me any confirmation. It has not given me a confirmation to the downside. It did not give me a confirmation to the upside. But I have marked out my protected high that I am expecting the market to break if it is going to buy, and I have marked out my protected low that I am expecting the market to break if it is going to go to the downside. So you don't have to take trades in between nowhere. You don't have to take trades in between the market. Just wait for a confirmation. Let the market give you a confirmation. This can take a long time. Yes, this is not the only index you're trading, and if this is the only index you're trading, you can spend some of the times it's going to take, you can spend it reading, watching movies, instead of forcing the market. So you don't have to force the market. You can also get another index that you can be trading if this is the only index you're trading, or you can start trading the currency pair market. You can just get another alternative instead of waiting for the market in between nowhere and then you start forcing the market. Here is one of the mistakes a lot of traders make. You just get into the middle of market and you just enter the market. You start guessing. Now I have marked out my protected high that I am expecting the market to take. Now looking at my protected high, you can see that we have a hunt of liquidity. So making it a valid major characteristics of major liquidity. We had this hunt of liquidity, so this is a characteristics of hunt of liquidity. So if the market breaks that high, I am going to be looking for a buy move, and the market can eventually come into this place and it will not break the high. The market might not break the high. It might come into that particular internal structure, then give you a confirmation that you should sell. It can give you a confirmation that you should sell this market. Don't hesitate to do that. You can sell the market if the market does not break this area. So I am just going to wait for something like this to happen on either this 1 hour time frame or my 15 minutes time frame. Then I expect a retest, then I move with the trend. But regardless, don't enter this particular market in between nowhere. A lot of people will be looking for a sell. You are going to be looking for a buy, except you are a scalper. Yes, 5 minutes time frame would have given you maybe a confirmation to the downside to continue a particular movement, but know when to get out of the market. But if you are an intraday trader, there is no essence trading this particular market right now, because the market is just in between nowhere. It is in between nowhere, so there's no point analyzing this market and checking this. The market can also get to 50% or into your OTE level and start giving you a confirmation to sell. Remember, the last break of structure is to the downside on H1 time frame. And our overall break of structure was also to the downside, which is the weekly time frame. You can use time frame alignment to continue the move to the upside or to the downside, that is only when we've gotten to the HOTI level or we've gotten into the internal structure of this structure. But right now you can just do yourself so much good by staying off the market. Wait for the market to break either to the upside or break it either to the upside or to the downside. Don't just enter the market anyhow. It's really that's going to work for you. So here is the analysis, or here is my bias for volatility 50 index. Here is my bias for volatility 50 index. I'm going to see you in the next video. Have a lovely trading day ahead. All right, bye guys.